Amazon.com looked tiny, by the way. It's a...
That's really good. That's supposed to be bad fun. And then disclosure. No.
Okay, Jeff Bezos' laugh grows more and more boisterous every day as he's hauling bags of billions down to the bank. I'm going to be diving into Amazon. I'm going to be taking sort of a historical look. We're going to look at the charts, and I'm going to give you guys my overall opinion as to what's happening with it. I think it's going to be a great deep dive today. I'm also going to take a look at two other important technical things with you guys. We're going to look at the SPY, and I'm going to talk about where the overall market is and how that might affect Amazon and the rest of big tech. And I'm going to finish off with a conversation about what I'm seeing in the VIX chart. You guys remember the VIX chart measures fear and it measures panic in the markets, and I'm going to let you know if it looks like things are going to be calming down or getting worse. Guys, this is the Stocks with Josh show. As always, I appreciate you guys joining me. I appreciate all the likes I get. I appreciate all the comments. Go ahead, say hi, throw a heart in the comment. Let me know if you guys are making any money on some of the plays that I've been sharing on this page, as well as the Discord. Posted a trade setup for DraftKings. I looked at the charts. It looked like we were going to get a little pop today. And I said, guys, if this gets above $26.50 in the first hour of trading, it could be a nice little go long. It shot all the way up to $27.15. And so I think that DraftKings is looking like it's building on a consolidation box. It did a sweep of liquidity, and it looked like it was going to go higher, and it did this morning. I gave that call last night. I try to feed you guys in the Discord and on this page. If you haven't already hit the subscribe button, don't miss out. There's a lot of technicals and analysis, as well as stocks and trade setups coming out of this page each and every day. If you're a member of the Stock Josh fam, you know it. Okay, guys, let's talk a little bit about the SPY. I'm going to show you this chart. I didn't make this chart, but it makes this point perfectly. It talks about what 2022 looked like in comparison to 2023, the types of corrections or crashes that we had in 2022 versus the corrections that we've had in 2023. And here's what it points out. In 2022, we had 3 severe corrections that largely were around 20% or more. Each time the market began to fall apart, it was falling 20%. But so far, in this new environment, since we bottomed at the end of last year or the beginning of this year, we see that in 2023, all of the pullbacks have been moderate. And that's what I had predicted for this current pullback, is that all that we would do is come back 10%, and that we could then continue in our bullish run. And I want to make this point. When we were running up for the first half of this year, the S&P 500 went up 32%, and there was absolute euphoria. There was the feeling like it was never going to end, that the market was only going to climb. And all we have done is come back 10% today. We're sitting at a 10% correction today. We're sitting on support, and there is absolute fear and maximum panic, and people are talking about selling everything they've got. And guys, I just wanted to put this in perspective. We're still in a bullish run. We have not broken down. It looks to me like this 10% correction is holding up. So don't panic, guys. We always want to look at both sides of the case. And right now, let's not get too bearish in this moment. I think it's a buying opportunity, and I'm going to break that down specifically for Amazon and a couple other stocks. You guys know that I love Google. I'm currently in a large Google swing trade, and I love Tesla. I'm currently in a large Tesla swing trade. And let me make this point to you guys real quick about Tesla. Guys, 200 technically looks identical to 100 at the beginning of this year. And so I'm just going to come right out and tell you, none of us know the direction of this market. I think the $200 that we're sitting at right now is the new $100 at the beginning of this year, and I think that we could, over the course of the next 6 months, end up going all the way back to 300. Now, my prediction that I've given in a recent video is that we would likely see 250 in the course of time, which would be putting us right in the middle. So it wouldn't shock me if Tesla finished up this year at 250, possibly moving up to 260, coming back to 250. That's kind of what I think is going to happen. But again, we don't have a crystal ball. These are just my thoughts and my trades. Now, in a coming video, I'm going to break down some analysis of the SPY. I'm going to try to do that this weekend because everything that I had predicted to you guys in the end of July has all come to pass on the SPY. I showed you guys that we had a head and shoulders pattern, which was bearish. I told you that the neckline was 433. We came beneath that. I told you that we were likely going to hit 418. We came down, got close to it, but didn't quite hit it. That was an ominous warning that we would probably be back to fulfill that head and shoulders breakdown. We came back up, tested the neckline at 433, got rejected, which was a clear sign that we were going to come down to 418. And in those two first initial videos that I gave you guys at the tail end of July and in the beginning of August, I said that the ultimate location that we would hit would be right at 413, which is where we sit today. And I'm going to tell you guys, all of that turned out to be the case. I sometimes go back and look at my charts and I go, Josh, you should have followed your own charting advice because it turned out to be absolutely accurate. Guys, it did. I think we're setting up for a bounce. That's just me. That's how I'm investing and trading. And all the things that I'm buying, I would be okay with holding in the long term. Great companies like Tesla and Amazon, even if they went down a little bit more. I actually am not afraid of them. Now, I'm going to do a historical deep dive of Amazon. We're going to talk about kind of what's going on over the last year. We're going to talk about the earnings, and I'm going to give you guys some fresh technicals. But before I do, I want you guys to check out the Patreon because that's where you're going to get the most content. That's where you're going to get those early trade setups, and that's where you're going to get my plays. It's the Stock Squad. It's me, Stockmo, Keenan Grace, and Stock Up with Larry Jones. It's not just me. All four of us are feeding content, answering questions. I went into the Discord last night, I think around 9 o'clock at night, and there was Mo interacting and answering technical questions. To be honest with you, I think it's an incredible place where you've got four people who are deep in this market helping out the bigger community. So click on the link and check that out for yourself. Okay. Let's just do a recap of Amazon. So we know that 2022 was an absolutely ugly year for Amazon because they lost $500 billion of market cap in that ugly year. It wasn't a good year for long-term Amazon holders, but 2023 found Amazon at the low price of $84, an incredible time to buy. And since then, it's gone up 63%. And we know that we came right up to $145 and some change, and it sure did look bullish. It seemed at the moment that it was inevitable to climb above the previous 52-week high, which was 146 and some change, but it failed. But to put it in perspective, it's still 37% below its all-time high. So we know companies like Apple and Nvidia, they made new all-time highs this year, but Amazon has not. It's 37% below its all-time high, which means that this may be one in which there is more opportunity. And specifically, Amazon needs to get back above 147 to confirm its overall bullish move in 2023, and I think it's absolutely possible. Now, let's just take a minute and contemplate what some of the analysts are saying about this. Well, the average price consensus for Amazon in 2023 is $131, which is where we find ourselves today. Are they right? Is there any more upside, or are we going to finish the year at 131? Overall, that would be pretty bullish to me still. Just like that intro video of Jeff Bezos laughing and laughing and laughing as he grows richer, richer, and richer, expresses this company in the last 12 months generated over $500 billion of revenue, which is absolutely incredible. This is, when I think of Amazon, I literally think of Lord of the Rings, where, it's like one ring to rule them all. I think of literally one company to rule them all. Now, personally, I don't like that. I like small business. I like things to be broken up, but that's where we're at. And the fact is that Amazon is a company that's been worth investing in. On one of those points, let me just remind you guys that in the last 10 years, this stock price has 8x'd. It's been on a massive growth trajectory, and I don't think it's hit its top. But there are three other bullish observations I want to make for you guys today before we get into earnings and the technicals. And one is that 43 analysts rate this a strong buy, not a buy. The majority of analysts covering this stock rate it a strong buy. And the 12-month price target for this company is 175, which means that most analysts absolutely think that this is going to get back to its all-time high price. And as far as fair value goes, the fair valuation of Amazon right now is above $154. And so there's many analysts who think that this is a cheap company at this current price, even with the run-up that we just saw. So let's just dive into earnings and the technicals, and let's see where this thing is going. Well, earnings turned out pretty good. There were some mixed results. I'm going to break it down for you guys. For one, they beat revenue expectations. They exceeded them. They beat earnings per share expectations. They exceeded them by quite a bit. Their AWS Web Services, which is an extremely important part of their business, that's their cloud service. That's also the one that ties them to the most AI services. They actually were lower there. Similar to Google, I'm surprised that they haven't been punished more. But again, I think it's because a lot of big tech was sitting down on its lows, and so there really wasn't much more room to technically punish them, and so they've popped, and so far pop has not begun to sell off like we saw with Microsoft. Now, as far as forward guidance goes, and that's a pretty important part of the business, their Q4 anticipated net sales, the guidance there was actually lower, so it missed the guidance expectations. But as far as operating income, they said they're going to make more money. It was higher, so it exceeded expectations, and I think that that is one of the biggest points that the market responded the most to. I've mentioned it over and over and over again. Wall Street loves profit margins. They love increasing operating income and operating profit. That's what they love. So that brings us to the charts. You know that despite all the hype, despite all the bullishness of the story, we don't really care. I like to look at it. I like to analyze it. But really, it's the charts that, in my opinion, show the way. And yesterday, before earnings, I gave you guys some predictions. I told you guys that if this did well, it would initially jump to 126 bucks, and that's exactly what it did. I actually have said that twice in the last week, that Amazon would hit 126 if the earnings were good, and it did do that. But the question is, what is it going to do next? Well, I prepared this technical for you last night, and it's already done the first step. The first thing I was going to tell you guys about Amazon is that it's on its way to 130, which we see that it's done that today. But now it's going to get more interesting, because I see the potential of an inverse head and shoulders potentially forming on Amazon. Now, some of you guys might say, Josh, you see inverse head and shoulders everywhere. Guys, these patterns are very consistent in the market, and they show a lot. They give you a picture of stocks that are either breaking down or building up. And here's where I see the neckline. So I want you guys to keep an eye on this with me. I'm going to put these types of charts as well as updates on this in the Discord as this story develops. But if we are seeing it correctly in advance, we have the opportunity to trade it and to follow the pattern for as long as it plays out. So where's the neckline? The neckline's at 135. Now, if you understand the way these types of things form, that means that if this is going to prove to be a long-term bullish inverse head and shoulders, we should get back up to 135 here pretty soon. And if we hit that mark, it's probably going to work as resistance, which would make a ton of sense because Amazon would have run up quite a bit, $15 in just a short amount of time. I would expect it to come under selling pressure. But what that then means is that we would know that it would be coming all the way back to around that 124, 125 range to form the other shoulder. And that would give us a good sense of where to take profits on puts, as well as where to reverse and to go long again. Now, if this is correct, if I am seeing this in advance, one, it could be very helpful for us in swing trading Amazon. And two, it may also foreshadow something that's going to happen in the market, which could be that we're going to continue to climb because we've sold off quite a bit going into the end of this week. I think that the first part of next week is going to be pretty bullish for a lot of big tech. I think that Tesla is going to do well. I think Google is going to do well, and the QQs are sort of already pointing in that direction. But once we get somewhere in the middle of next week or the tail end of next week, it could mean that we're going to see more fear come back into the market, and we're going to see this this stronger sell-off. And that brings me to the VIX, which I promised you guys because I think the VIX tells that story as well. And so Amazon chart, Tesla chart, Google chart, QQQs, all of these are giving me confluence, and I like that. One of my next videos that I need to do is going to be a breakdown of the SPY, more specifically and in detail, as well as an analysis of big tech and which are the outliers. The last time we did that, we identified Microsoft, and that was truly turned out to be the outlier, so we want to do it again. So keep an eye on my next video. But that brings me to the VIX. First of all, guys, before I get into the VIX, I just want to thank you all for joining me. Again, don't miss these technical updates because for me, they're helpful in my trading. They're helpful for me to make money, and I want all of you guys to make money. Don't miss a single video. Hit the subscribe so you make sure to get the next one. All right, let's wrap things up with a conversation of the VIX. We know that the VIX measures fear, and the market fear has been steadily increasing so far since, we'll say, August, September, and now October. We've had 3 months of increasing fear. We've seen a pretty big spike. We're up over the 20 mark on the VIX. But if we go into the VIX and we look at the RSI, we see that this last spike up of fear and the prices that dropped, we see bearish divergence, which means that there is still fear in the market, but it's not as bad as it was last week. So the markets are calming down, which means that if the markets are showing us that they're not under as much pressure as they were over the last week, it means that this coming week could be bullish. Now, that's good. That tells us that we might be at a place where we could make some buys. But as the VIX, as I've been saying about the VIX, ultimately, perhaps not this next week, but the following week, we're going to get back under selling pressure. But here's the thing. Some of you are going to say, well, I'm just going to wait till then to buy, Josh, because stocks will be even lower. No, I don't think they will. I think they might set up exactly the way I'm imagining Amazon's going to set up. I think that if we're going to continue bullish, we just hit the lowest low on all of these over the last couple days, and we're going to come up, and then we might come under some more pressure, but it won't be as bad as the pressure we just had. We won't get lower than 10% on the SPY, and we will come down. Maybe that'll be news-driven. We might spike up on the VIX, hit that 26, and that might mean that from that point forward, we're going to see more bullishness. These are all just thoughts. They're just my thoughts. Let me know what you think. Are you guys saying, Josh, you're crazy, I'm selling everything and going to cash, or Josh, I'm loading up right now on big tech as well. Let me know what your favorite company is. Are you making long-term investments? Are you swing trading? Are you making any money? Guys, thank you for joining me today. I hope you all have a great weekend. I hope to push out one more video this weekend talking about some of the things I mentioned I wanted to cover next. As always, peace and blessings. Thank you for joining me. We'll look forward to talking to you in the next video.